going on, traders? This is Jack with the Trading Tribe, and we are back at it today with another video. And super excited about this one. This is kind of a continuation of the last video we had, which was going over how to trade uptrends. And today we're really going to look at the opposite, right? How to trade downtrends, which is one of my favorite strategies to use when swing trading and day trading in the markets. Feel free to like and subscribe to the channel for a lot more content like this. We have a lot more coming this year, so super excited for some of that content, and I think it'll really help you as traders, really no matter where you are in your trading journey. And if we look at the chart today, it actually was a pretty perfect downtrend that actually looks like it's concluding now. So we can really talk through a full kind of review of a downtrend, how I made money in the markets today, and how you can make money in the markets when these uptrends occur and when these downtrends occur. So hopefully this will close the loop on the series, if you will. And we are looking at the day trading chart or the intraday chart of natural gas, which is a futures contract that I like to trade in the markets. So just a little FYI there, that's what this ticker symbol is here at the top left. And if we notice right from the chart here, disregard the time below, it doesn't really matter. There was tons of different entries here today. The main point is really just to learn how these downtrends work, what to look for to kind of spot the downtrends, and then how you can actually take advantage of them. And in this case, right, like I said, there was tons of entries today depending on when you were awake and ready to trade at your desk. So if we look, right, downtrends are really just the opposite of uptrends, right? So on a downtrend, what we're typically looking for is lower lows and lower highs. And it doesn't need to be perfect, right? The better it is, the better of a trend it is. But we'll notice, right, price drops and makes a lower low, and then it pops up, makes a lower high versus last time, and then does it again, right? Lower low, lower high, lower low, lower high. And it goes on really all day, right? Lower low, lower high, lower low technically, lower high, lower low, lower high, lower low. So all of these, we call them pivots in the market, confirmed that it was a downtrend. And in a downtrend, at least how I like to trade, especially when day trading, I like to be with the trend. So I hate fighting the trend. I hate trying to trade today, for example, and buying the market doesn't really make sense because you're trying to kind of catch a falling knife, if you will, and it gets really dangerous, right? Because if we're trying to buy today, we have to be really careful, right? Because price is dropping like crazy. So in this example, especially on a strong downtrend like today, what we actually want to do is we want to only look for shorts. That's going to be the easiest way to make money, and that's going to be the highest probability as well. Because really every single bounce today got sold into. We'll notice it almost made lower highs all day perfectly. So first of all, finding the trade is super easy when you're trading with the direction. And then your target is also pretty great. So the trade I actually ended up taking and loving today the most was actually this very first setup after the market opened. So we'll notice right around 8:30 today, the market popped up and we saw that lower high, we saw that lower low. That lower low is essentially my signal that I can take this trade. And then from here, I have a lot of videos going through how I actually think about trades. So definitely go review those if you're not familiar. But essentially, what I wanted to make sure of is that I had a good risk to reward ratio. So when I measured this trade, I actually measured it from here. I really liked this level because it was that prior support and then was broken. So it made sense for price to kind of come close to that prior low. And when it did, right, if we look at the risk to reward here, our potential was to make at least 700, and we only had to risk 320 So the tick or the risk to reward ratio on this trade was over a 2 to 1, which is typically my rule, and that made the trade valid essentially. So I actually got into this pop and then sold into this flush. And the nice thing is with a downtrend, what you want to do is you want to get in on these bounces because it's going to make lower highs typically. So getting in on these bounces are where you'd want to be in the trade for. For your risk or your stop loss, you want that prior high to be your stop loss. Because if we think about it, if we get in here, the price really shouldn't go all the way back to that prior high. It hasn't done that all day, and that would essentially show you that the trend is over, right? So your stop loss is actually going to be based on the structure on the chart, and you want to put it where the lowest probability of it getting hit is, which on a downtrend is that prior pivot. And then for your risk to reward ratio, you base your reward on that prior low for a downtrend. So when we take this trade, our target is that prior low. Because if we think about it, a downtrend should make lower lows and lower highs. So on this flush, we knew it was going to go at least to this level based on our chart analysis. And sure enough, it did. It nicked our order perfectly and then actually kept going. And trends are hard to catch perfectly, right? You're never going to trade something perfectly. My trade today could have made $1,700 per contract. So I definitely could have done better here and held longer, but you're never going to trade perfectly, right? We had no idea that it would drop this far. We had no idea it had this much room. The essential practice here is just taking advantage of this falling instrument, and this is how you'd actually do that. And I have a couple videos on the channel on kind of spotting bearish weakness, and that's really when the trend is ending, which is kind of right now. We'll notice it's not making lower highs anymore. It's making kind of similar highs, and it's not making lower lows. It's making higher lows now. So that is essentially a sign that the trend could potentially be over, and we do not want to take this trade. So we'll notice if we took this trade, for example, this is the only one that potentially could have lost today. So we want to look at that structure to avoid taking a loss. And this is a loss that would definitely be avoidable. So hopefully this really helps on kind of how you tackle downtrends, the different ways you can trade downtrends, and feel free to like and subscribe to the channel for a lot more of this. And let's make money together, team. Thank you.